Right, DBXJP is next. This is Japan. Funny place, I must say. Third largest economy in the world. Slow growth, demographic dividend not looking too marvelous. That's because they have declining numbers of children being born. They've got this strange quantitative easing. They've gone negative with regard to rates. That means that you actually have to pay the central bank if you leave money with them. Rowan's going to explain to us in a minute what that means. The market there has been up and down. The yen there has been up and down. That's their currency, of course. And the largest companies in this index, those would be companies like Toyota, Mitsubishi, NTT-Docomo. That's the company which is the sort of lead telecommunications company. Canon, which makes cameras and consumer electronics. And then Ajinomoto, which is the people that make the soy sauce. I kid you not. The world's largest soy sauce manufacturer. That's part of the Japanese index. Of course, it would be. Market capitalization of this, I wonder who's bought these. About 700 million rands worth. And again, a dividend yield of around 0.74. So that's quite entertaining because Japan, I mean, let's look at the chart because I've actually got no idea as I sit here. The yen is an unusual currency and it's an unusual economy.
Yeah, absolutely.
Okay, that looks like a sort of an intraday price. So let's well, there you go. 10 rand 60 is what you'd pay for one of those.
Yeah, so I mean,
explain
again,
all this to me. What's going on in Japan?
On the Japanese economy, it's interesting because you're getting quite divergent views. I think you mentioned there's, in particular, a significant amount of monetary stimulus being pumped into that economy. It's been really a very low growth economy. They've been suffering from zero inflation to sometimes negative inflation, which if central banks want to avoid anything, it's negative inflation because it just sort of grows your debt faster than anything else.
People feel terrible about saving and so on.
And it postpones consumption because you're going to wait for prices to get cheaper as opposed to more expensive. So but they in particular have been very aggressive.
But it hasn't caused too many distortions because mostly they have lots of savers who've been happy to buy the bonds issued by government and so on.
And so now there's what is now called NERP apparently. That's negative real
interest policy.
rates. That's right. So and basically they penalize you for putting money in the bank. They're going to charge you. So a year later you're going to get less than what you put in today. So that really, I guess, also stimulates the carry trade, which would be, for example, Japanese housewives taking their yen and rather investing that in a South African bank because you're going to get 8%, say. So if the currency devalues by less than that, you're going to gain.
What does it mean for Toyota, for example? If that's the biggest index constituent, if there's this NERP going on and they are making money in trucks all over the show, are they going to do well or badly? Is the share price going to go up?
Again, I guess it's a currency call, so that will devalue the currency because you incentivize to sort of ship the currency out, sell the yen and buy other currencies. That's obviously good for exporters, particularly good for Toyota. What you are seeing from the car companies, in particular the low oil price and subsequent petrol prices, is driving some demand for motor vehicles. I guess Volkswagen's dropped the ball in Europe and the US. Is an opportunity for these other manufacturers to take some market share. So that's one of their sort of benefits.
So what does the Nikkei 225 or the Japan MSCI Index look like? I mean, has it gone up over time? Has it been a bit wobbly lately?
It's interesting to note that it had a massive bubble in 1987 where it shot to meteoric heights. It has never regained those heights.
87 or 97?
87.
87.
I mean, this is how incredible. And
that was the
notwithstanding
heyday of sort of
the
Japanese
low interest rates that they've had, absolutely.
And in more recent years?
Yeah, so more recently, I think what you're seeing is quite a lot of shareholder activism, much more shareholder-friendly policies. There have been a few fraud issues with accounting, but that's sort of viewed as positive because they're becoming more transparent and these things are coming to the fore. People are more positive about the reforms that the Shinzo Abe government is embarking on, plus the quantitative easing and valuations are quite low.
Plus, like, no immediate bubbling over of their fight with China, because it's very important the Japanese economy has that positive relationship with their biggest source of labor and market demand.
Exactly.
Okay, it all comes down to the famous hot or not. So right now, is this something that one should be looking at?
So this one's more interesting. I'm now concerned of its exposure to China. A lot of these, the smaller companies manufacture a lot of equipment and machinery that would go into Chinese manufacturing plants. And the stats that I've seen, been a significant drop-off of machine orders. And that's quite negative, obviously, for Chinese growth, but obviously the impact on Japan and Japanese growth. This one, it's more an interesting call. If you feel the valuation's cheap, this one is more interesting, I guess, more on a valuation and refloating of the economy, given all the reforms. So this one I'm going to say hot, notwithstanding the concerns.
Okay, I'm going to go not hot on this one, just because, I mean, to me, I've never really had a strong feeling of conviction either way what might happen next in Japan. Anyway, good.